Welcome back to Investing Talk podcast. Today we're digging into Comstock. We've had requests asking, is this stock a good buy right now? That's the big question. And before we really get into the numbers and the story here, just a quick reminder. If you find this conversation helpful, please do subscribe, like the video, and leave a comment. Also, really important, if there's another company you'd like us to take a look at, let us know in the comments below.
Yeah, Comstock is, it's quite the story. A microcap, definitely. What the sources show is a company really trying to pivot, moving away from legacy mining into, well, let's call it the green tech space. Think renewable fuels, advanced recycling. High potential, absolutely, but also highly capital intensive.
And that's where the picture gets complicated, right?
Mm-hmm.
Our analysis shows this huge gap. On one side, you have the fundamental reality, the actual numbers. On the other, this massive speculative potential.
Exactly. It's less about current sales, much less. This is almost like an investment vehicle right now that just happens to have some, well, negligible revenue coming in.
So the CEO's main job isn't really selling stuff yet.
Not primarily, no. Look, right now, it's about raising money. It's about restructuring, fixing the balance sheet. That's the focus, not selling a finished product at scale.
Okay, let's unpack that then. Let's use the sources and look at the cold, hard numbers first. What's the actual financial health before we talk about the future?
Right. Income statement. It tells a clear story. You've got this very small revenue base trying to support enormous investment needs. If we look at the full year 2024, revenue was just $2.94 million. I mean, that's tiny in the grand scheme of things.
Tiny revenue, okay. But how did that compare to the losses?
That's the kicker. Net losses for 2024 were $28.5 million. Huge compared to the revenue.
Wow. And the gross margin, what they actually kept from those sales?
Only about 6.7%. Very slim. And the trend isn't getting better short term, first half of 2025. Another $16.9 million net loss.
So the losses are sticking around, maybe even getting worse.
They are widening, actually, which tells you management is spending aggressively. They're burning cash to fund this new direction, the tech, the expansion into recycling and fuels.
Okay, that leads right to the big question. Financing. How on earth are they covering a nearly $30 million annual loss on just $3 million in revenue? Where's the money coming from?
Outside money, pure and simple. The company is very open about it in their projections. For 2025, funding operations means raising equity.
Selling share.
Right. Selling off assets they might have and issuing debt. It's not coming from the core business generating cash.
Because the core business isn't generating cash.
Exactly. Operating cash flow for fiscal 2024 was negative. Deeply negative, actually. Minus $17.7 million. That number shouts high cash burn. It requires constant outside help, structurally.
That sounds incredibly risky for investors. But wait, there was a recent shift, wasn't there? Something about their cash position.
Yes, liquidity, that's one bright spot, sort of. End of 2024, they looked really tight on cash, less than $1 million, just $954,000.
Okay.
But by June 30th, 2025, that cash balance jumped way up to $18.6 million.
Okay, $18.6 million. That sounds like a massive improvement for the balance sheet. Problem solved.
Well, yes and no. It sounds great, but we need to look at where it came from, right? Connecting the dots in the source material. That $18.6 million wasn't from selling recycled stuff or fuel.
So where did it come from?
It mainly reflects $20 million in proceeds, cash that came in from a third-party investor, specifically putting money into their Bioleum unit as preferred stock.
So it's external capital again, just raised at the subsidiary level.
Yeah.
Okay, $20 million is helpful, but you just said the annual loss is running closer to $30 million. Isn't that $20 million just, well, a temporary fix, a Band-Aid?
That's exactly the skepticism you should have.
Yeah.
It buys them time, crucial time maybe, time to execute their plan. But it absolutely confirms Comstock is still completely dependent on external capital and selling assets to keep the lights on during this transition.
So temporary solution, structural problem. Got it.
Precisely.
Okay, that cash burn is definitely the elephant in the room. But they must be spending it on something they believe in. Let's shift to the new strategy. What are these high potential areas? Metals recycling, Li-ion batteries, precious metals, and renewable fuels.
Yeah, these are definitely future-focused sectors. Huge growth potential on paper. But, and it's a big but, they are incredibly capital intensive, very expensive to get into. And for Comstock right now, these are still niche areas. They just don't have significant scale advantages yet. The big projects they're banking on, Bioleum fuels, that huge solar panel recycling joint venture, they're not mature. They're not generating real commercial revenue yet.
So if they lack scale, do the filings mention any kind of competitive advantage, a moat, something that protects them from bigger players?
Not really, no. The sources suggest there isn't an established moat right now. Success seems to depend entirely on executing their plan flawlessly, getting the engineering right, getting the partnerships working.
So a weak competitive position for now.
Pretty typical for a microcap trying to break into these heavy industries. Yeah, execution is everything.
Okay, this is where it gets really interesting, though, because management isn't just sitting there. The recent moves, especially the last few months, July to September 2025, look like they're trying very hard to change the story, to shore things up financially.
Absolutely transformative moves, financially speaking. The biggest one, structurally, was probably spinning off Bioleum.
Right, the fuels division.
They carved it out into an independent company, Bioleum Corporation.
Yeah.
And that's where they secured that critical $20 million Series A investment we talked about. It brought in cash immediately and moved some risk off Comstock's main balance sheet.
And they didn't stop there, right?
Yes.
They also raised money for the recycling side.
They did. They raised another $30 million in gross proceeds, specifically earmarked to build out those solar recycling facilities.
And used some cash to clean up debt.
Yes, that was key too. Used some of the new money to materially strengthen the balance sheet, paid down about $8.4 million in promissory notes, resolved some other liabilities. It's a financial cleanup operation.
De-risking the foundation before a big operational push, maybe.
That seems to be the goal. Plus, Comstock now holds a potentially valuable asset. $65 million in convertible preferred stock in this new separate Bioleum entity.
Okay, $65 million preferred stock in Bioleum. Explain that for us. Is that cash they can use now?
No, not immediate cash. Think of it as a future asset, a large potential ownership stake in Bioleum. If Bioleum does well, maybe even goes public someday, that $65 million preferred stake could become very valuable and liquid.
And Comstock could then sell it or use it to fund its other business, the recycling.
That's the idea. It's like a future currency they hope to cash in down the road. It's all potential right now.
Okay, so all this restructuring sets the stage for what comes next. Execution. What are the key milestones we should be watching for?
Number one, without a doubt, is visible progress on building those big solar panel recycling facilities in Silver Springs, Nevada. That's the main event. Management is projecting really dramatic revenue growth. They're saying 8 times the 2024 levels, but only once those facilities are up and running. Commissioned.
And when do they expect that?
They're anticipating early 2026, so, it's still some ways off. It's basically a bet on their engineering and construction timeline, a high-stakes bet.
And in the meantime, any updates?
Well, there are investor visibility events. They presented at the Latham Partners Conference recently, September 30th. That was a chance for management to explain how they're using the new cash.
And earnings, of course.
Yes, the Q3 2025 earnings release. Probably coming up in November. That'll be the first real look at how much cash they've actually spent since the raises and where it went. Transparency is key there.
Should we quickly mention the speculative side too, the rumors?
Definitely worth touching on because that drives the volatility. There's market chatter, whispers about potential sales of non-core assets, maybe unlocking another $50 million plus. That would boost cash without more debt.
And talk about Bioleum going public.
Yeah, heavy speculation around the timing and structure of a Bioleum IPO or some other public offering. Given Comstock's big preferred stake, that's a major potential catalyst people are watching.
Okay, let's pivot quickly to the technicals, the stock chart. As of mid-August 2025, the price was around $3.05. What's the recent action look like?
Yeah, looking back over the month prior to that, the range was roughly $2.65 on the low end, up to about $3.67 on the high end. Pretty wide swings.
Any key levels traders might be watching?
Support seems to be forming near that $2.50 to $2.65 area. Resistance looks like it could be up around $3.70 to $4.
And the short-term trend?
At that point in August, the price was actually below its 50-day moving average, which was around $3.25. So technically that indicates a bit of a negative short-term trend.
And volatility.
Oh, very high. Frequent jumps or drops of 10-15% are pretty normal here. That's classic microcap behavior, driven more by news and speculation than solid fundamentals.
Which brings us back to the fundamentals. Because you could argue the technicals barely matter when the underlying risks are so significant. We need to highlight those major risks again.
Absolutely. They override the chart patterns, really. We flagged 4 main ones based on the sources. Risk number 1, those chronic net losses and the negative operating cash flow. It means perpetual dependence on outside financing.
Which leads directly to risk number 2.
Dilution, exactly. High risk of dilution because they have ongoing equity shelf offerings set up. We saw updates on this in August 2025.
Explain shelf offering quickly.
It basically means the company has pre-approval to print and sell new shares pretty much whenever they need cash. That can significantly water down the value for existing shareholders. It's a constant threat.
Okay. Risk number 3.
Failure to scale. The new business's recycling fuels they're unproven at the scale needed to be profitable. If they can't hit that economic production level, that 8x revenue target they mentioned, well, the whole viability of the company is in question. It requires flawless execution.
A huge if. And the final risk.
Lack of institutional support. There's just not much widespread coverage or ownership by big institutional investors.
Why does that matter?
Institutions tend to bring stability and liquidity. Without them, you get the kind of high volatility we see, where small trades can cause big price swings. Less of a safety net.
Okay. So we've covered the cash burn, the potential, the restructuring, the risks. Let's bring it all together. Back to the original question for you listening. Is Comstock a good time to buy now?
Well, pulling together all the findings, synthesizing the analysis from the source material, the overall rating given in that analysis is, frankly, low. It's a 3 out of 10.
Ouch. A 310. That's pretty harsh. What's the reasoning?
It is harsh, but it's grounded in the financial reality we've discussed. That severe negative cash flow, the complete lack of positive earnings right now, it just prevents this from being considered investment grade for anyone with a long-term view. Now, the analysis does acknowledge the positive recent steps, the Valium cash injection, paying down debt. Those things strengthen their ability to execute, no doubt. But fundamentally, the stock remains very high risk.
So the final judgment based on the sources.
It seems clear. This stock is really only suitable for short-term trading, maybe, or for highly speculative positions, betting purely on the hope of future success in green tech, on them hitting those targets.
But not for long-term buy and hold investing based on what we know today.
Absolutely not. Not based on current verified fundamentals. The risks are just too significant right now for that approach. But before we wrap up, let me leave you with a final thought to mull over. Management is banking everything on that dramatic revenue growth, 8 times 2024 levels, remember, tied directly to commissioning those solar recycling facilities. So the question is, if, and it's a big if Comstock actually pulls off this commercialization plan over the next 12 months, deploys the capital effectively, how quickly could that harsh 310 fundamental rating actually change? And what would be the very first, earliest sign of success we should look for in that upcoming Q3 earnings report? Something to watch closely.
That's a great point to ponder. Thank you for joining us for this look at Comstock. We definitely encourage you to explore the source materials yourself and form your own conclusions. We'll be back soon with another analysis.